Well, we are barely starting our year 2025. I'm making this video the second day of the year 2025. And by the way, let me tell you one thing. This video can save you a ton. I'm about to share with you on this particular board 4 accounts that you shouldn't put your money in the year 2025. And guess what? I'm going to add you a bonus of 2. So I'm going to give you 6 accounts or 6 places where you shouldn't put your money. By the way, sometimes when you get it with where not put your money can actually answer the other question of where to actually put your money. You get what I'm saying? Because see, the right investments or the right place where you keep your money, that runs hand in hand with actually having to get a maximum output or an optimum profit out of your money. This is good, Joseph. In case you're watching me for the first time, welcome to this particular episode of 4 accounts where you should put your money, and I talk about investments. And if you don't want to miss any good video out there, make sure that you subscribe to my YouTube channel, because I do this each and every day by the grace of God. And if you're a returning subscriber, as always, thank you for your eyeballs, and make sure that you leave a comment on the comment section. Make sure that you like this video, and let's get the business now. Point number 1, the first account that you shouldn't put your money is called the bank deposit or the bank fixed account. The bank fixed account. I know this one is one of the most popular places where you guys keep your money. Show up, unless, I have to say this in the disclaimer, unless it's a negotiated fixed deposit or the fixed account. Well, I've been talking about this like a million times. Allow me to repeat once again, okay? What we say is that do not put your money in a fixed account in a bank unless the negotiated fixed account. There are 2 types of fixed account in a bank. There is this one that usually be given with when you show up to a bank, they just give to any random people. Hey, instead of having this money, you can just invest this money. You get what I'm saying, okay? Now, there is another one. Now you get to, you get to be invited in a certain room somewhere in that given, bank, and you negotiate for an interest that to be given. Hey, you can say I need 5, I need 15. No, they say no, we can give you 12. No. Maybe you reach to a point of say 13. But when you go to, for example, I'm referring to Kenyan banks. If you go to any Kenyan bank, most of them will give you a fixed account of around 6.5% or 7.5%, And you can imagine, like last year, but one on 2023, we had an inflation of around 9.6%. And here you're being given 7.5%. I mean, you are you are 2 points below the inflation. Are you together? And remember, that fixed deposit or that fixed account or that fixed deposit interest that you're being given, it's way below. I mean, it's even what we call pre-tax. Once it's actually post-tax, when all the tax deductions are done, you find that interest is actually going all the way to 5% or something also. So the bank fixed deposit is not really that particular account that I would recommend you go with as far as the investments are concerned. Why? Because you're not really getting maximum out of your money. Are we together? So it's always good to make sure that, hey, you know what? Get your money where it is giving you something out there. The other one is also the remaining with the bank is called the bank savings account. The bank savings account, unless you are accumulating money to reach a certain particular amount for you to invest it somewhere. The bank savings account is generally where you take your money, you put it in a bank, and they tell you, I don't know, we're gonna give you, 2%, 3%, whatever the interest is. For example, in Kenya right now as we speak, the inflation is around 3%. Let's say you're given 3%. I mean, it's like nothing going on. So it is good to make sure that the bank savings account does not really expose your money out there, does not really give you, how can I tell you this? It's like you've been given a very heavy, car that has everything, for purposes of, say, running for sports and something, but you're barely, driving that car at 10 kilometer per hour or something of sort. I mean, it's you're not really, you're underutilizing that particular car. The same case applies when it comes to this type of accounts. I'm starting with these ones because they are very popular. And by the way, listen, these banks that are offering you this particular investments method, they have other investments method that they rarely talk about. How many here have you ever heard of a bank advertising their MMF account? None. No bank will actually say, hey, you know what, we have a money market fund account, you come invest with. Does it mean it is bad? I mean, seriously, I want us to just reason a little bit. Have you ever heard of any bank out there, or let's say an institution advertising a money market fund? especially the banks one. Okay, the non-banks may, but I've never had. But the banks one I've never had. You never show up to a bank, they tell you, hey, you know what? Instead of this, have money being here. So how about you invest in a money market fund and ask? They rarely say that. Why? Because the moment you take that opportunity. By the way, even if you go to a bank and try to ask this thing, some of them they actually hide this idea. Why? Because the whole point of a bank is to make sure that they are get much from you. You just save with them. Once you save with them, now they take that money, they invest it where they get a better return, and they give you zero. See, the point is, it's always good to understand in the game of finances, you really need to make sure that you are smart, you know what you're doing, and you know where you are heading. Otherwise, if you just stay there thinking that the banks, you see, please don't confuse those beautiful and wonderful smiles that you get once you show up to a bank, when you're depositing your money. Yeah, of course, not that they really mean. Of course, they have been trained to make sure that they serve you better, to make sure that you deposit as much as you can, for them to be able to invest, for them to actually. And by the way, I don't blame them. They are in business, and they don't do anything wrong. They are okay. It's only that you are not informed on where to supposed to invest. By the way, I always tell this, yeah. If this is a bank, they are there to make money out of your money. There is nothing wrong with that. Also, make sure that you can be able to make money out of that particular bank. So find a way whereby all of you and the bank can actually benefit out of your money, because this is a commodity. Instead of being idle, let it help you. You are the bank, and let it help me because I'm the owner of that particular money. We go to the next investment, or the next particular account that I wouldn't really advocate you go with, and that is none other than having an account called the merry-go-round. Okay. Merry-go-round. What is that? What does that merry-go-round mean? Merry-go-round mean? I've never talked about this. You're not supposed to put your money in such kind of a thing. See, the merry-go-round in Kenya is commonly known as chama. I know when I touch this, ladies will actually, come on the comment section and trying to crucify me. But anyway, hear me out, okay? I'm saying you shouldn't put your money in a merry-go-round thing. In Kenya, we have something. The other name of this is table banking. It's where, say, 10 guys, 10 whatever, come together, you, me, and someone else, and then they say, hey, you bring your 5K per month, you bring your 5K, you bring your 5K, and then all this 5K that we have times 5, which is like 25,000, we be saving it somewhere and such kind of thing. You know why I'm saying it's not that good? Because most of the merry-go-round, they actually achieve the short-term goal. Hey, we want to buy a chair, we want to buy a carpet, we want to buy that. You're actually not cushioning yourself from inflation. So you shouldn't put your money in that particular savings or in that particular kind of an account. Okay, listen, there is nothing wrong with merry-go-round itself as a concept of coming together for you to raise that money. I love it and I support it 100%. Where I'm having a discrepancies about it is the nature at which you guys you're keeping your money. If you can come like the 50 of you, the 10 of you, okay, you get that money and maybe open a money market fund, or maybe open, say, in an investment fund. Maybe you decide to be investing in a treasury bill, or maybe you decide to start in an investment like a real estate, or maybe you do something, you get, even if it's a rate, real estate investment trust, like you investing that money. That money is not idle. That money is actually not being eaten away by the bag called the inflation. So reason why we discourage, or I discourage, it is the merry-go-round, because of its nature. You see, it was solving the 1960s problem. Right now we are in 21st century. It is good to make sure that you're doing things in a different way, so that at least you can be able to. Yeah, I know you're gonna tell me, hey, it's not about finances, it's about social life and what have you. Well, of course, after investing the right place, then you can socialize and all those kind of things, making sure you're getting everything right. It's like hitting or killing two birds with one stone. Okay, well, I do not even, why are we even killing the birds in the first place? But anyway, the point is, make sure that at least you've invested your money in the right place, and of course you're socializing if that is the goal in that particular group. Okay, so now the merry-go-round is not really a better or very nice place when it comes to an investment. The investment or the account that I'm about to tell you, this one may be controversial, but I will try the best I can to make sure that I give you information better. There is this investment usually called the endowment policies and what have you. Okay, now see, endowment is usually an investment method. Okay, it's usually a fund. It's not even an investment method, actually. It's more of a life insurance policy, whereby the beneficiary, or that person who actually subscribed to that endowment policy, usually gets a lump sum of cash at the end of a certain period of time. Or if they did not manage to reach that particular period of time, can actually be given, maybe let's say the beneficiary has died, or that individual who was doing, so that money that you usually give. It's like a life. It's like, I don't want to look at it from the life, from a pension kinda. It's a life insurance kinda. You know why I'm discouraging it? I'm discouraging it because, okay, listen, there's nothing wrong with it. If you've already invested in other areas, you have MF, you have businesses, you have investment, you can get it. That is when you've already exposed your money into making maximum out of it. Then there is nothing wrong you having the life insurances and what. But you running for a life insurance where you don't even have investments with you as of now, it is not a wise move. Why? Because it does not give your money a full exposure. It does not allow your money to actually go out there and make maximum out of it. You know, whatever you find that this money that you're being given in terms of a lump sum, it is not really a reflective of what you could have gotten if you did put that money into a different investment, probably say an MMF or something of sort. And of course, I know they will tell you, hey, you know, that one is risky and whatever. Ask them, when I give you this money, where do you invest it? See, where they're discouraging you from the investing, that is exactly where they're investing. So it's always good to be smart out there. But I did not say, and I want you to get this, this is my disclaimer, I did not say it is not a good thing to invest. There's nothing wrong with having a life insurance, but understand things. Insurances do not make us money. Insurances insures that what makes us money. For instance, if you buy a tractor and maybe let's say you do roads and whatever, and then insure that tractor, insurance is not making you money, but is insuring you that particular device or a gadget that is making you money. Now that's when we say you're having an insurance of a particular thing. But do not confuse having an insurance with an investment. It is very hard to put those two things at the same time. Okay, but if you tell me I'm insuring my investment, now you're speaking. Are we together? Now, the point should be, by the way, I don't know, I'm just thinking out loud. Maybe can we have an insurance of an investment? For example, if someone invests in a treasury bills and bonds, or maybe invest in a money market fund or a fixed investment fund, can I have an insurance over my investment? Because if I have an insurance over my investment, I will definitely subscribe to that. But I don't think it's even there. Maybe I'm giving insurance companies an idea of where they can actually invest. And you guys, if you utilize that idea, I'm gonna ask for my patent and whatever. Now we go to the next one. Now, the other investment, or rather the other account that I don't really recommend that you go with as far as this particular period is concerned of 2025, is what we call generally the policies. You see, there are these policies, policies, the education one, I don't know, the pension ones, and then what. Okay, there's nothing wrong with all of them. Again, I'm not saying that you should solely do away with them, but when you look at it, when you get what you're getting at the end of the period, you wonder. For example, they tell you, hey, subscribe to our policy for the next 10 years, be parting ways with 5K. I don't know, we're going to give you 600,000. But if you put that money, say, in an MMF, you're going to end up with more than 1 million. So you find like you're not really getting best out of it. Another thing, that pension that you're actually getting, okay, pension fund, that thing that you're getting out of there, out of your savings, will never actually solve or ultimately solve all your money problems when you retire. That's why I tell people, especially the civil servants, those people who have been employed, and there is that deduction towards your pension fund. That pension won't really solve all your problems. So it's always good to create another pension by your side. You find somebody has been working for the last 35 years, you retire, you get yourself 3 million. 3 million is like 30,000 US dollars. 30,000 US dollars, you can even barely build a home. So you find you're still struggling here and there. And I know some guys who have done that because, hey, you are employed, you didn't have a time to start a business, you know nothing about investments. There you have your 3 million, you don't even know what you can actually do with that 3 million, and then you get even more confused than you were before. So it's always good to make sure that, yeah, they're giving you that pension, because, okay, it's by law. You cannot ignore, you cannot say, hey, I don't want that, but it has to be deducted, okay? Therefore, create another way or another pension, a sideline that, to make sure that both of them are running concurrently. Here you are investing, well, as they say it, and the other side you're actually investing. So therefore, by the time now you're maturing, or the time now you're about to receive your pension this side, you're also getting another way that you can actually call it a pension on the other side. So when you have a combination of all these things, you're gonna get it right in 2025. And of course, you add the God's grace and will and favor upon that what you're doing. This is Good Joseph. As always, we make videos about investment, savings, and anything related to that. So if you don't want to miss any good videos of mine, make sure that you hit that like button, make sure that you subscribe, and see you in the next one. And by the way, don't forget, do something about in this particular year. All right, no matter how big it or small it will be, but just do something. By the time now we say another new year, you're gonna be somewhere. This is Git Joseph, and if you need my services in one way or the other, my number is always on the description of this particular video. See you in the next one.